Hey everyone, it's Julie and David. On today's Did You Know show, we are answering your comments from YouTube.
All right, 2 weeks ago on our Did You Know show, we did an episode called When is the Housing Market Gonna Crash? And that video got over 1,000 views and over 31 comments so far. There were some very interesting comments, so we thought today we would respond to some of those comments right here and now. So Julie, what's the first comment we're going to talk about?
According to C. Swanson, the answer to that question of when is the housing market going to crash, they said in 10 minutes.
Wow.
That was 2 weeks ago, so I think we're okay for the moment there, but definitely appreciate the comment.
Yeah, I think you missed the mark a little bit, C. Swanson, but thank you so much for watching the video today. All right, comment number 2 comes from Disorderly, and he says, there won't be a crash in the single-family housing market because there's way too much demand than supply right now. That's a really good observation. The demand is going to see a steady growth due to millennials reaching home buying age and starting families, while the supply is going to lag behind due to the decade-long lack of new construction homes, as well as people who bought or refinanced in 2021. And that's an excellent point. Over the last decade after the housing crash, most of the builders just stopped building in between 2010 till 2020. And that is an excellent observation because we are definitely missing out on a lot of that new construction.
He continues to say another reason supply is going to be low is because of investors throwing money at real estate to hedge against inflation from the trillions of dollars of money that have been printed.
Yeah, I agree. I'm on his side there. I do think inflation is going to rise. We're already seeing inflation numbers go up last week. And when that happens, people tend to want to own real estate. I mean, just this year, we've helped a couple of investors purchase multifamily homes here in Stockton. So there's definitely investors in this marketplace. Let's take a look at the next comment.
All right, so the next comment is from Bob Siebert. He says, only fools are buying in this low inventory COVID sugar high bubble primed for a crash.
LOL.
LOL. David, what are your thoughts on that?
Well, I appreciate the comment, Bob. And you said only fools are buying in this low inventory COVID sugar high bubble primed for a crash. Number one, I don't think we're primed for a crash. The housing inventory is at super historic lows. We actually need more homes for sale. We actually need more foreclosures. Historically, there's 250,000 foreclosed homes each and every year, and those have been completely cut off by the feds and the federal government. So we need, actually, as rigid as it sounds, we actually need more foreclosures to hit the market to fuel this buyer demand. And on top of that, the housing market right now is really affordable. It's more affordable today because of the historic low rates than it had been in previous years. Even though prices have gone up, home affordability index is more affordable now than it was just a few short years ago.
So one thing I'd like to add on to that, and we are definitely feeling it here in the Central Valley in the Stockton-Lodi area, is that rents have gone up dramatically. Rents are exceptionally high, and rental properties are also hard to come by as well. So if you are a credit-worthy individual that could take advantage of these historically low interest rates and buy a home, yes, it's going to be a bit challenging. There is not a ton of inventory, but you could effectively attain the dream of home ownership and still have a lower monthly payment versus paying rent.
All right, guys, thanks so much for watching this week's video, and thank you so much for the comments, both the good ones and the bad ones. We really appreciate it. We'll see you next Tuesday on our Did You Know show.